Let's get across the market open. Marcus Padley joining us from Marcus today. Marcus, happy Wednesday to you. Let's start stateside. More new records for the Nasdaq and also for the S&P. What are you watching there at the moment?
Well, you probably saw, Andrew, overnight Oracle is up 26%. They've had a huge jump in bookings for the latest quarter. They're doing a deal with OpenAI, and their cloud business is going off. Cloud infrastructure revenue up 55%, and they have forward bookings up something like 360%. In other words, cloud business is flying. They've signed contracts with existing customers. They expect more in the next quarter. So that's lifted everything to do with chips after hours. I think we've got Broadcom up again after hours. It was down a little bit in the normal session. It's up 20% in a week. So Broadcom up a little bit, AMD up a little bit, Nvidia up 1.8% after hours. So still watching big tech, which is our focus in our strategy portfolio. And that's all going well. This whole cloud capex story continues.
What do you make of Apple? Because it has released its latest line of iPhones. Didn't really excite the market, did it?
No, well, you and I, Andrew, were probably around in the 80s when or maybe I was, you weren't. When the personal computer was developing, and you simply had to buy the next one every time a new chip came out and more memory came out, and that famous Bill Gates quote that 240 kilobytes should be enough memory for anyone, and clearly it wasn't. I think mine's now running 32 gigabytes. And there was a necessity to upgrade your PC. That obviously, as we know, has already matured in the iPhone market, and slimmer with better eyesight doesn't really guarantee excitements, and that's what's happened overnight.
All right, so look, also just what's going on below the surface there, particularly take a look at macro in the States ahead of the Fed meeting, of course, next week. We had a key revision there on payrolls numbers supporting the case for an interest rate cut.
Of course, we all know the US is flying on expectations rates are going to be cut. There's a 7% chance of a 50 basis point rate cut on September the 17th. The non-farm payrolls revision, which is the whole of the year to March, was revised lower. It was expected to be revised lower by 818,000, and it's been revised lower by 911,000. So the jobs market from 2 months ago, the jobs number was very weak and revised down, and Trump sacked the Commissioner of Statistics. The jobs number we've just had was weak again. I imagine the Commissioner's a little bit nervous, and then we've had this revision. So running into this September the 17th, clearly expectations that rates will now, or a rate cut's baked in. And we could see a 50 basis point rate cut, and we'll probably see a rate cut every month for the next 3 meetings. And there's even to the point where the chat is now, if there was a 50 basis point rate cut, that would scare the market because it means the Fed's having a bit of a panic about growth. Whereas in Australia, bond yields bond yields fell 15 basis points for the 10-year bond yield last week in the US, our bond yields went up 3 basis points on the back of that strong GDP number. So we're going in the other direction. ANZ said there might be no rate cuts this year. Another strategist yesterday said that we may just see one more rate cut this cycle before rates bottom in Australia. So the US is gorging on rate cut hopes, and Australia is realizing that maybe we aren't going to see rate cuts this year. So we're going in opposite directions. And the US market, thanks to big tech, has started to outperform Australia again, which suits us because we don't hold anything Australian.
So what is your broader strategy then, Marcus, particularly given those valuations we're seeing on Wall Street at the moment?
Yeah, look, overvaluation is an alert in this. You're talking big tech. The average for the Magnificent Six, average PE is over 30. The long run average is 22. Can you believe it? But the 10-year average is around 25 to 30. So a bit overvalued. That should just keep everybody alert. It's not a reason to sell until everybody gets upset about it. So we're watching the herd not being fussed about high valuations. And the day they start to care about it, we might do something about it. So for the moment, we're running fully invested. We continue with our theme, which is the US and big tech don't hold anything in Australia. We're performing very nicely. It looks like Australia's now going to underperform again against the US market. We've got to watch this CPI number, not tonight, tomorrow night. That could put a spanner in the works. We've got to watch whether the Fed cut by 50 basis points and how the market reacts to that. But this is the game. We think we're on a great long-term theme. Oracle have confirmed it overnight, and we'll keep running with that until the herd decides it's run far enough. The only reason we'd sell this huge theme, it's got a horizon way 20, 30, 40 years out, AI. The only reason we'd sell this theme is because we thought we could buy it back lower down. So we might one day sell, but for the moment, very happy playing big tech, playing the US and not being in Australia.
Are you playing that directly with stocks like those AI hyperscalers, or are you taking an ETF approach? How are you doing it?
No, our portfolio is what we call a managed strategy portfolio. Its mandate is only Australian listed ETFs. So at the moment we hold U100, FANG, SEMI, and IVV, which is the S&P 500. So only ETFs. The individual stocks are too volatile. It's about sleeping at night whilst you make money. It's not just about making money. So Nvidia is 10% off the top. If you adjust in Nvidia, you'd be having a heart attack. So ETFs are a great balance for us between risk, volatility, sleeping at night, and return.
Well, speaking of money, but not necessarily being able to sleep easy at night, crypto, Marcus, what are you seeing there? Because there is a lot of money to be made, but not a lot of earnings, it would seem.
Look, I remember when I was working for Bell Securities in 2000 in the tech boom, and some of the old hands were wagging their fingers at us, making fortunes in the tech boom in short periods of time, buying stocks with nothing but intention and absolutely zero earnings. And the predators were all over it, which is investment banks issuing stock because there was so much money being blindly thrown at the tech boom. Same thing seems to be happening. I just can't believe here we are in less than a year since the election. Eric Trump is worth $568 million with a 7.5% stake in American Bitcoin, which doesn't yet do anything, earned $3 million last quarter, and has got a market cap of $8 billion. And there are other, the AFR had it, or Bloomberg had a great article yesterday about what's going on in, it's not Bitcoin. Bitcoin's dead for the moment, but it's in any company that announces its intention to build or mine coins of one sort or another is going absolutely nuts. As always, it's none of our guys will be playing it, but it's get out. If you have faith, then you are the big idiot that everybody's making money out of. This is short term. There's no earnings and it'll die. You look at the Melania coin, the Trump coin, you look at Trump media, they all peaked on issue. All right, go and have a look at the charts. Same thing will happen here, I assume.
All right. Just quickly, lithium taking a hit. The main Chinese mine looks as though it's back online. We're obviously expecting those stocks to fall today.
Yes, Albemarle was down 11.5% overnight. SQM was down 8.8%. This mine, some analysts was saying this mine will be shut for a year. They're planning to open it again a week later. So lithium has had a fantastic rally on the back of this squeeze in production. That might end today. Certainly looks like it from US stock performance.